Hello, everyone. How we doing tonight? Nice to see you all show up in numbers here. Pretty fun. Sometimes we're a small crowd in here. Still love to be here. I am doing great, Justin. Thank you for asking. Had a great trading week this week, and after a few weird weeks, right? And as you guys that were already in the Discord know, I took a week off, came back, just started with a loss. That put me in a mental state that I wasn't too happy with. But now I'm very glad I'm on point with the charts. I managed to take two very good trades um, this up to now, right, this week. And I won't be trading tomorrow because I'm quite satisfied with the results of my week. But we'll, of course, talk about it. And as you guys know, there was no price action review in this Discord. We were in the 2 Degrees Discord yesterday. I don't know if you guys came. There was quite a big audience, so I didn't have a chance to filter through it. But if you did not watch that PA review, you really should. It was a great one. Looking at the price action from Wednesday CPI, definitely very insightful stuff. We also shared a few insights on that point, but we're here to talk about today, right? And what do we see? First of all, on our chart, well, we had a very big expansion the day before, right? And when you look at it from points and you're like, okay, 414 points, like, dude, right? Just look at the start of November, right? We were doing 3% days like it was nothing. But I don't care. I want to follow up based on recent price action. And that's where, here, I'll take a second and open the Rice Statistics app just very quickly. And don't worry, you guys, you're not supposed to be able to see. I just want to bring our seasonality chart up here. Just give me a sec. Just have to open that up. Let's see how quick the app is. I want seasonality, futures, NASDAQ. Let's open that chart up. Let me just take a screenshot and I'll bring it over to TradingView so you guys can see what I'm seeing. I love seasonality, by the way. And for me, seasonality is all about averaging the daily moves, all right? So looking at seasonal averages of daily moves based on the time of year, right? So if I just bring that a little bit bigger. There we go. Can you guys see this well? Just give me a quick message in chat. Yes, awesome. What do we see from this? Well, I don't care about what happened previously, right? But what I need to understand is that the red line here is the year to date. And when we are within seasonality, how I utilize seasonality is that when we are close to our seasonal averages, so here you can see 5-year average, 10-year average, 15-year average, and all time. But all the other colors except for the red one are the averages. The red one is our current year. When we are within seasonality, I like to see us follow seasonality. So when we are close to these seasonal averages, I just follow what they say. And I use that as my bias. I use that as my understanding. So now, seeing as we followed this up move, we had quite a bigger retracement than we usually do mid-November. But November formed a low, and now we're going to be running until the end of the year. That's what I'm following. That's what my 5-year average that you see here in green, says. So that's what I'm looking for, right? I'm looking for continuations to the upside, and basically what I wanted to showcase is the seasonal average of today, which is, we are the 12th. So let's go look at the 12th here. We are looking to be up 23% based on the 5-year average up to now. And that's pretty much what we're looking at since the beginning of the year, right? If we look at 2024 here, 2024 open is this, I believe. 2024 open right here, we're at 18%. So closer to the 10 and 15-year averages. But what do we do in December? We run higher, right? I went the long way to tell you guys this. And seeing how we moved so aggressively on the previous day, took out some very important levels, right? You can call this all-time high when it's this recent. Current weekly high is what I like to do. So we took out these very aggressive levels. And as I said, if you want to see the review from yesterday, definitely was some very beautiful and precise price action that we saw for CPI. Well, you can go back on YouTube and watch that video. But for today, I was looking for some sort of continuation or retracement, right? Because when we're bullish, we expand through highs. But taking into consideration that we are Thursday, and if you guys don't know the statistics related to that, Thursday is very often a retracement of the weekly expansion. what is the weekly expansion? The weekly distribution. So in the correct direction, the aggressive movement towards your drawn liquidity, which in our case would have been higher here as we discussed in our weekly outlook, right? And Thursday oftentimes retraces that move. You're either going to have a retracement on Thursday or it's going to be on Friday. So I was looking for either a continuation to the upside or a retracement lower. Where are we going to retrace lower? Well, I see that we formed a fair value gap, an order block, and we currently had a fair value gap when we opened right here. So I wanted to see us rebalance that gap before it forms, right? So what are we looking for? An immediate rebalance. This is our retracement objective. And if you want to utilize premium discount right here of our current range, you'd be looking for a retracement all the way down to the order block. But that's quite an aggressive move lower for me to consider the day after that we broke our previous range. So you're looking for a retracement. If you want to be a little more precise, you can perhaps go to the 4 hour. And right here, you'll notice that on the 4 hour, I would be looking at these consecutive down close candle. This is an order block on the daily that we're looking at on a 4 hour, overlapping with a fair value gap. That is a beautiful level to look for a retracement on our strongest asset, right? On our weakest asset, you'd be looking for the first discount in efficiency, which as you can see right here is our inverse fair value gap, right? That is my first inefficiency that's in discount because this fair value gap is at equilibrium. First inefficiency in discount, beautifully tagged this level. I'm just going to go in replay mode here so that we don't have to see the daily open and we can see for the current day specifically. Let me just make sure. Yeah, so we see our entire day's move. But we reached that in the PM session here on ES. Beautiful move lower, retracement lower. Going to the 15 to get a little more insight, and I guess I have to go once again in replay mode here to hide all of this. What do we see? Well, we have all our previous understanding, sure. You have your immediate rebalance objective on this gap, and that's why I'm telling you guys, definitely go look at the price action review from yesterday if you want to understand why I'm not utilizing the first discount, in efficiency as my objective on NASDAQ. I explained pretty in depth about that yesterday. And on ES, well, that's very simple. Weaker asset, we're going to look at the first inefficiency and discount, which in this case is this fair value gap, right? If we just look at both of these assets together, and let's remove the power of 3. I don't want to see power of 3 right now, or remove that, and we didn't use any of the previous day level, so let's not use liquidity depth. There we go. Looking at this, right? What did we do? We're always thinking in terms of power of 3. Well, we accumulated clearly. Do I have a clear manipulation? Well, not one that jumps to my mind until I look at SMT, all right? So until you look for SMT at this point in time, you're not seeing anything. But once you look at that last swing point that we formed on the day and see that there is SMT at this level, this is what confirms that move higher, right, is your manipulation. So you had accumulation, manipulation, which then started the whole daily distribution, which we had multiple phases through that, right? Let's just actually make this a little bit paler because that was hurting my eyes. So you had a first expansion all the way up to 10 a.m., followed by a retracement, and then a continuation lower. What news did we have? I believe we only had the 8:30 news, but I just want to go back on my Forex Factor and confirm. Yes, so we had PPI and unemployment claims at 8:30 right here. And this is where I'm going to start talking a little bit more in depth about news. And I'm going to build up that to you guys since there will be the news analysis in the Rice Statistics app in the near or sort of near future, right? But I'm going to start talking more about it in the price action review so you guys can get an in-depth analysis of it. But I'm looking at the 15-minute news candle. What does the 15-minute news candle mean? Well, it started at 8:30. I'm looking until 8:45. Yes, Miss Tenda, I don't know if I'm pronouncing that right. This is all being recorded. Every live event we do here multiple times a week are recorded and added to YouTube. And you can just see the YouTube channel actually in the Rice section of the Discord, and you'll see all of the updates from the YouTube. So definitely all being recorded for the people that can't make it or the people that have to leave. My pleasure. But as I said, I'm looking at let's just put a bright color here. I'm looking at the 15-minute time window from the news to frame my data high. So let's actually name it. Why do I call it a data high? Well, that comes from actually KIT, ICT concepts, if you don't know them. That's just how he calls them. I don't know why, but that got to me. So now I just use the terms that he utilizes, right? Very simple there. But I'm looking at the highs and lows that are formed within the 15-minute from the news to after, right? Following the news. This is my data high and data low. If none of these levels are taken out by New York Open, which you can see right here, right? Your 9:30 open. I'm actually going to move this a little closer in the morning. Yeah, let's do this. So you can see your 9:30 open right here. And I'm actually, you know what? Let's go even further. Let's have a lot of drawings on our chart. Let's add both an opening price and vertical line so that we can see our New York Open right here. Since none of these levels are taken out at New York Open, I know what is happening. And this is all from studying data about how we interact with news and how we interact with news levels, right? You're looking for higher pricing, for example, you see an expansion lower. Well, in this case, if I'm looking to go long, right, as I said, I was looking for a continuation higher or a move lower. And in this case, we had SMT here, but we had already expanded pretty aggressively up until that news. So I was framing a retracement higher to then go lower. Why? As we said, once again, we're bearish due to the daily power of 3, but we've already had quite a range before the news. So what are we going to do? We're going to retrace and then continue. That is all profiling. That's how I lost today targeting data high. My entry was at 8:45 a.m. See, for myself, I never trade before New York Open. So if we look at that New York Open, right, 9:30 equities open, what did we do? We consolidated. Well, you could have skipped all of that by just following the very simple rule. The data high and data low, if none of these levels are taking before New York Open, I'm waiting. What am I waiting for? One of these levels to get taken out. And as you can see, you had a beautiful framework. Right after taking out data low, you went straight for data highs. And that gave you beautiful entry levels. For myself, I did enter here because from this pattern, I was very surprised actually to not see any form of SMT between NASDAQ and ES here. And I actually did not even look at YM. Let's go look. It's been a while since I've looked at YM at this point in time. So no SMT with YM either, right? So all of that just tells me the same exact story, right? There should be divergence at this level. So if there is no divergence on this time frame, it just means that it was shorter. So that's why I have the 15-second and the 30-second on my chart. I never use them unless in the very specific case of there's no SMT, I'm going to go lower. I'm going to wait and try and look for the time frame that there is SMT on. And as you can see here, there is SMT between these 15-second swing points, which is right here and right here. Well, these are equal actually on ES, which, as you guys know, I treat equal as if mitigated. So I'm looking for more SMT, which I don't actually seem to be finding. There is no SMT. There is SMT on the highs, but you'd be looking for SMT on the lows. So there is actually no SMT at this point in time. So definitely not what I'd be looking for, but there was higher time frame, I believe intermediate time frame SMT. You can clearly tell. Again, this is something I shared during yesterday's price action review. I talked about candle to candle SMT. What is that bullshit once again, right? What is that new concept that everyone loves talking about it so much? Well, it's just lower time frame SMT. So in this 15-minute chart, I can see by looking at the candle at the same time, so in this case, 8:45 the previous day, 8:45 the previous day, that there is SMT. Because one of these candles is trading below and one of these assets, is trading below and the other one is trading above. But I won't be able to find the swing points unless I go down the time frames, probably in the 1-minute chart, perhaps even in the 5-minute. I'll try and go quickly. But yes, see, in the 5-minute, 8:45, 8:50 swing low, 8:50 swing low. So looking at candle to candle SMT is just an easier way to find lower time frame SMT. And as you guys know, I don't care my SMT is in what time frame. I really don't, right? And I actually put it to that swing point. So let's put it to this swing point, which is the morning one, which in this case was actually not trading below. So I need to use another swing point. I'll get there, guys. I'll get there. So right here, we were trading below this candle, which on ES as well. Which candle were we not trading below? The one just before. So I'd have to go somewhere here and see that ES is not trading below at this point in time. So we'd be actually looking at here. There we go. I'll get it, guys. But as you can see, divergence, candle, SMT. So for NQ, is why I'm better for SMT or ES. This is something I have not tested at length yet. See, the Right Statistics app is all about bringing data behind these concepts so that when you ask a question like this, like what is better for SMT to compare, right? NQ with ES or NQ with YM? Then you can just open an app and see right away the data for it. And I'm actually working on that script at the moment, the SMT divergence script. So once that's added to the app, I'll be able to answer that question. For myself, just from my manual backtesting, I've found it more consistent to use NASDAQ and ES together, and I never look at SMT anywhere else. That's because I only trade NASDAQ and sometimes ES. But I use these assets only. I don't look at YM, but earlier I was just curious to see. But there is SMT at this point in time. Here, I'll just put it right there so it's on the right swing point. There is SMT. So you can look for longs. And as I said, I looked at a 15-second chart in this case, since there was no recent, right, local SMT. So I was looking here and I saw a beautiful breaker block actually right here on the 15-second chart. And I entered right on this fair value gap. Once we retraced into it, got a very aggressive trade. Now, this is not something I recommend. I saw this because I expected a very quick move after this manipulation, since we accumulated for so long within this range, right? We had a lot of consolidation before taking out this level. But truth is, you should always focus on a mechanical entry model. And what is that? Wait for your first breaker to form on a 1-minute chart. When did that form? Well, let's look at ES right here. I feel like my magnet is messed up for some reason. I don't know if you guys see that, but it's just snapping to random places. That sucks. Okay, there we go. Now it's fixed. Sorry. So we have our breaker block right here that was formed at 10:24. So just 1 minute lagging to NASDAQ, breaker block here. And on NASDAQ, it is that breaker block right here. What do we look for after a breaker block? Well, overlapping fair value gap or inversion fair value gap. Where is the first entry that is given to me? Well, this is in close proximity. And again, if you were there yesterday, you'll notice that this is actually within 10 handles, but this candle is within 5 handles. Is actually, when I'm looking at a fair value gap, as I always said, I'm looking at this level, right? This full candle. But this inversion fair value gap is also very nice and gives you the same entry, pretty much. So no matter which one you were looking at, you saw the same potential entry. Let's actually change this. I have a color for this. I just never use it. So let's actually start using it. Consolidation is orange. Let's do this. Awesome. Always messing around with templates, colors, and such. If you guys are traders, you know that's always ever changing. Well, at least it is for me. Looking at this inversion fair value gap gives you a beautiful entry, but this fair value gap was the easier entry to spot and the one I took. Now, 3PD array stop loss rule, right? Fair value gap, order block, and the inversion fair value gap gives you a pretty nice stop right here at 15.75 handles. How about the fair value gap below? This is also a unicorn. Also a unicorn. This inversion fair value gap is also a unicorn. But how do I choose which one, right? How am I going to choose which one I'm entering on? And yes, I was talking about this fair value gap earlier, just to be clear. But how do you choose which one you're working on? You're entering on. Well, the first one that it taps into. So in this case, if we're being 100% mechanical, it would be this fair value gap. But I'm just saying, look at the difference with the inversion fair value gap, right? So if you saw the inversion fair value gap first, well, that's a great entry too. Does that make sense, Stenda? Awesome. And here, what are your objectives? Well, partial, definitely low-hanging fruit objective is data high. I'm not going to be taking profits before data high. Well, personally, I did because I entered below here. I actually have my execution somewhere. Starting to trade on NinjaTrader now. What's up, Fares? Nice to see you in here. But definitely a beautiful take profit right here, right on data highs with your beautiful news framework from data low to data high. Definitely something nice there. So that was the perfect trade, the best trade in my opinion that you could. And as you can see, ES also reached its objective, which actually formed SMT at those highs. So that was also your signal to get out fully in my book, right? There's counter SMT at a key level. I actually drew it wrong, so let me actually fix that. There we go. There's counter trend SMT, so I'm long. There's counter trade, SMT at an important level. That is my sign to get out. Moreover, it's in the 1050 to 1110 macro. And what do we know about that specific macro? It likes to spool against profitable AM traders. Okay, what are my profitable AM traders? Long. Clearly, we can tell. So what is it? Is the 1050 to 1110 macro going to do? It's going to start a retracement, right? Yes, Justin, I'm heading towards full NinjaTrader. So that way I'll be able to trade my live account directly connected on TradingView and have all my prop firm accounts just handled by NinjaTrader with my copy traders right on my VPS, since I'm going to start trading on my MacBook more and more. I have a full home tower PC, but I'm going to be on the move a lot more in 2025. So I want to get used to trading on my MacBook pretty much. So trading on NinjaTrader and having my live account connected to TradingView. Yeah, that's just what I have right now. It's actually the reason for me traveling with that is because there can't be any games on it, Mistenda. So it's a fully work computer. If it's in Windows, it can't ever be a full work computer. But as I was saying, definitely beautiful reversal here, 1050 to 1110 macro, which you could have framed retracements on, right? As we know, you're looking at your intraday time frame. What are you going to frame retracements to? Well, first discount and efficiency. And if we look at our current range, premium and discount, what is my first discount and efficiency? Kind of hard to spot here. I believe this fair value gap, yes, it is perfectly at equilibrium, which for me is good enough. Well, actually, it's a high probability order block, so I wouldn't use this. So no discount and efficiency. Go to the 5-minute chart. Once again, mechanical logic. First discount and efficiency here. Wow. Beautiful. Beautiful is this 5-minute fair value gap. And as you can see, beautiful retracement into here. That is also a trade I would be willing to take, right? Because if I'm going long, and if this move lowers a retracement, we're going to retrace all the way to this objective. And you probably had, well, I didn't see, but you probably had a beautiful unicorn. Well, actually, you have a breaker block here, as we know, formed due to the SMT. And let me just do this, actually. And yes, just to answer you, I played a win. I don't look at general chat during these calls, so definitely only type in the stage if you want to ask me a question. Earlier, it seemed to be a force of finding SMT. Aren't there times where SMT doesn't happen, but price moves and you would still take the trade? No. SMT is a need. So whether that SMT is very clear, so local SMT, just as we see right here, just recent SMT, or it's just divergence on the higher time frame, divergence has to be present for me to consider a trade, because I trade expansions after reversals, which means that there is no reversal without SMT. So I absolutely need SMT for a trade. I just don't need that SMT to be recent SMT. I just need there to be divergence between assets, which tells me personally that there are institutional players behind that move. So due to that, I can frame my trade understanding that I am trading with smart money concepts and not trading retail liquidity. Very complex way of saying I need SMT for a trade. From this breaker block, you actually had another short-term breaker here, actually. Lower time frame, breaker form. But from this breaker block, you're waiting for fair value gap or an inversion fair value gap. There are none until this one, actually. So initially, I thought it was this fair value gap, and when it inversed, but this fair value gap gave you an entry. Definitely a small one, but I don't pick and choose, right? We inversed it on this candle, closing below it. So you're entering on the candle going up over here. 3PD array stop loss rule, right? Fair value gap. Then you have an order block right here, and you have another order block here. So your stop is actually at the SMT swing high, right? As I always say, 3PD array stop loss rule. It won't always be the best stop loss, but it will always be a good stop loss. And in this case, it was actually the best. And looking at this, where would you look to take profit? Well, of course, my final objective is this 5-minute fair value gap. But am I going to hold without taking partial? Well, no, I'm going to look for a partial. Once again, due to the SMT, this is my my breaker block. Let me remove this premium and discount. Started to get a little crowded here. Looking at these standard deviations, I have a high probability retracement objective here at New York Open, but moreover, I have equal lows just below. So I could frame us to go take out this liquidity and then continue higher, perhaps. So this will be a good partial objective, right? I'm just looking at in the distance to my retracement objective, utilizing standard deviations as confluence. Where would be a great area? This area with these equal lows, great partial, 1.86 partial, and then 4 standard deviations, which of course lines up beautifully with our take profit. Why? Because if your move is the true move, if it is a distribution, if you are on side with price, standard deviations of breaker blocks will always align. More importantly, if there's SMT and it is your true breaker block, beautiful. I have so much still to teach you guys. It is crazy. I sometimes get overwhelmed. Like what I've been working on these past 2 days, coding wise, definitely some real big stuff there. And you know what? I'm making you guys work for it. I'm making you guys wait for it because I all want to bring this in a very professional approach. I'm tired of people sharing, I'm sorry for my words, but shit content on Twitter, just a shit thread of like, oh, well, here are the ICT macros and why they're important. Oh, they're important because they generate price moves. Look at this fair value gap. I'm tired of seeing bullshit. When I share something with you guys, it has been proven by data for the last 20 years on hundreds of assets. That is why I want to bring it in a certain way. So I'm going to be bringing a lot more value into breakers. And as you guys know, my objectives are purely mechanically established always, and everything always aligns. So that's how you know something works, when everything aligns. Getting overwhelmed too, but not profitable yet, which is bad. Definitely, right? When you're not profitable, you shouldn't be looking at 20,000 different things. You should be concentrating on the bare bones of it. And that's why I brought the RISE model to the public, right? It is a very simple approach. And yes, there are a lot of moving parts. You're trading. You're doing the hardest job in the world. It's not going to be easy. But being simple, having a rule-based mechanical approach to price, that gives you 2 beautiful setups here. If you respected them to the T, you didn't even have to understand. You were bullish today? Here, you had your long. You were bearish today? Here, you had your short. Both opportunities. This was your first short opportunity. This was your first long opportunity. You didn't have to think. You didn't have to be good. And I'm not saying that for like, oh, everyone that didn't get a winning trade today is bad. That's not what I'm saying. What I'm saying is, see how easy it can be. That's what I'm trying to teach you guys. How easy you can actually make it to be. Yeah, that's a RISE model. That's a RISE model. Higher time frame point of interest, that's data high. That's a key level. Then you have SMT. You're waiting for a breaker block to form. Taking the first unicorn. Partial at a key level. That first one, same thing. Point of interest. SMT, first breaker block, unicorn. Taking my trade, stop loss placement is 3PD array stop loss rule. Now, the only thing that is variable is your objectives, which sometimes can change, right? But you had a very clear, at least partial at this level. For me, that was almost a full objective, but I was also looking for us to continue up till midnight opening price, which, as you can see, we did not visit here, but there was, well, ES visited this level a few times. but these are both rise models. Both these trades can be justified with the same exact logic, have the same exact logic for the entry, and have the same exact logic for the stop loss. How could you know? Backtest it. You want to spend hours backtesting the rise model and send me every single example? I'll review every single example and tell you, oh, well, see this one. Why is that not a good setup? Because of there. See, you actually had a breaker before. So who are you to choose the correct breaker? You just take the first one you see, right? I'll spend the time and help you guys. Definitely. And just to finish it, to complete the day of myself, after this retracement, you could have, of course, looked for longs. There are no rise model entry in this case, because once price overextends like this, I'm not going to take a unicorn this further down the line, right? 33 minutes after the breaker was formed. So for me, that's not a trade. And then here there is a unicorn, but I'm not trading during lunch, just in general. And what am I looking for after lunch? I'm looking for a lunch trade. As we know, you can look at the range from noon to 1 and see for that rate. So you had a beautiful lunch rate, right? So that's another short opportunity actually that you have. We have lunch low right here, and I am going to remove data low since we have completed that objective. Just going to keep it for the screenshot actually. Let's look at this. But you have a beautiful lunch rate, right? You're looking at the range from noon to 1. Why noon to 1 and not noon to 1:30? Well, we can use the range from noon to 1 when your objective has been met during lunch. High of the AM session, current high of day has been taken. That's an important liquidity level. So I can use the range from noon to 1. Noon to 1, this is my high. We first induced that high, which just makes it better. And then we took out that high and expanded lower. And see, you barely had any retracements until our objective was met. And then you had a more high resistance retracement. And of course, all the way down to 4 p.m. right here, which would have given you a beautiful trade. And of course, our higher time frame immediate rebalance. So I'll just call it IRB for immediate rebalance on the daily. And I'll actually call it plus immediate rebalance. I haven't talked about this for a while. I would love to run you guys through if you need. Let's actually just put that the right colors and size. There we go. And looking at this, where would your entry be? Well, same exact logic once again. Where is the first breaker that formed? Well, in this case, it would be this down close candle, right? Focus on this symmetry. And I'll answer your question in a second, Ms. Denda. I just want to finish this very quickly. I'm looking for an entry. What do I need? I need an inversion fair value gap or a fair value gap. There are none in this case, right? Where is the first bearish fair value gap that formed for this price move? This is actually not even a fair value gap, so it's actually here. For this to be a valid entry, what do I need? Well, first of all, I need for us to be over 50% of the range from the high I'm calling, right? So the high of my framework to my objective. So just by looking at this and plotting my implied dealing range, I am above 50% at this point, so I can take a short there. Okay, that's step one. What else? Well, I need to make sure that's still a unicorn, right? But what do we have here to the left? This is all a higher time frame breaker. It's also a 1 minute breaker, right? Right here. But if I look at the 5 minute chart, it might be a little easier for you guys to notice. As you can see, this moved lower, formed a range, then broke that range, and then created the breaker block. So definitely an intermediate time frame breaker. But if you look on the 1 minute, it is the same symmetry, right? High, low, higher high, lower low. Form the breaker, overlapping PD array, entry right here, 3 PD array stop loss rule. We have fair value gap, we have order block, and we have another order block right here. Do we have an inverse fair value gap actually? Yeah, we do. Which would have actually given you an earlier entry. Sorry, I missed that. Right here, we do have an inversion fair value gap, which means that your entry would not be here, but would actually be right after inversing that fair value gap, one candle over. And then your stop loss would be order block, inversion fair value gap, and order block. There are none there. So your stop would be here. And once again, as we said, target would be lunch low. I would be very happy with taking profits at this level too. So just taking a partial here where it's aligns with like what, 1.7 R. Very happy here. breaker block standard deviation, sure. More so about the premium and discount of this range, right? So if we just pull up the premium and discount, we're already trading in discount of this range. So this is a key level of liquidity, right? It's all low resistance up until this point, and then there's fair value gap defending it. Pretty much, you learn this stuff through experience more specifically, but definitely would look there to partial. That would have actually gotten sucked out. So if you didn't partial there and just held through, you would have had your full win. For myself, I know myself, and I know I would have looked to partial there and then place my trade break even, and I would have gotten stopped out at break even right here. So that definitely where variance comes in, but I would still say that the best choice would be to partial at this point. You got to pay the trader, even though you would have missed out on this whole move. So definitely a very packed day, right? As you can see just from my drawings here. Just to answer your question, Rastenda, and by the way, tell me if I'm mispronouncing your name, but you can learn my model directly on YouTube. The pinned video on my YouTube channel, yes, thank you, James, for sharing it, actually, is the Rice trading model. So it's been a while, right? So the model did not change, but just my capacity for talking and teaching has improved, but I still fall behind that video. It is very descriptive, very in-depth, and it shares my whole model completely. And if you look at these price action reviews every day, even the days that you miss it, you watch the recordings, I'm pretty sure anyone can become profitable from just that. Because I don't just tell you, do this, do this, do that. I explain to you why. Do this, do this, do that. Pretty longer price action review than usual here. 36 minutes, right? But we looked over a day full of opportunity, right? So you had, in my book, there are 3 valid setups today. Nothing other than that would be a valid rise model, unless you could justify that you longed here, right? So you longed here, but that is during lunch session, and I don't trade during the lunch. It is too often consolidation for me to consider looking for trades there. I know it's already a big review, but can you talk about candle profiles vite fait? Nice French expression there. And yes, I will talk about it for sure, so no need to worry there. Do you have data regarding big end dogs such as the one we had today, percentage filled? Yes, I do. That is in the Rice Statistics app, which you can get for a monthly subscription, right? There is a lot of data in there, and so I am charging for that. It is a business, right? I am charging for access to that data. We have, I think we're now releasing this, we're at 1.3 billion data points after releasing the candle profiles analysis. So it is packed. It is packed with a lot of value and a lot of control. And I'm going to start making more videos about it to share to you guys that don't have access. But of course, I'm biased, but I would definitely say go on ricestatistics.com and get yourself locked into your price while it's still cheap. And yes, $40 a month is cheap for the content in there. It is not cheap in general. For the value in there, definitely. Basically, the model is SMT, first breaker block, high liquidity for target and take partials. That is an oversimplification in my book. I would really refer anyone that wants to have the in-depth of the model to the video. What is it? I think it's like a 12-minute video. It's a super quick watch. And I'm just looking at it right now. It's a 20-minute video. And in that 20-minute video, you have 4 examples and the whole explanation of the model. I would really recommend you guys look at it. I would like videos on how to use the data. That is definitely coming, right? I'm focusing on that in the future. I never settle. I'm also trying to bring people to make such content. So I'm actually trying to contact influencers on YouTube and things like that, so that influencers that use data to trade, so that I can show them the Rice Statistics app, and it would be such a useful tool for them. Did we lock in low rates from Black Friday, or will they go up? Well, not from Black Friday specifically. That was a one-time discount. But for example, if you were subscribed at when price was $25 a month, you are still subscribed and will remain at that price until you cancel your subscription. So you will never be charged more. And actually, even if you cancel and you send me a message, and I actually have a list of the people that were subscribed from that point on, and I see your name, I'll get you there. Can we get that discount now? No, it is no longer available. But if you're trying to get it, we will be giving away, I didn't choose how many yet, but we'll be giving away multiple lifetime access to the app around Christmas. So between the 18th and Christmas, perhaps both, we'll be doing giveaways. So definitely go follow the Right Statistics account. It is in the official links in the Discord, and put those notifications on. So that way you can know when we do the giveaway. But I'll be spamming it everywhere in Discord anyway, so you guys know me. And yeah, just to go back over it, never settle. I'll be making a lot of videos about how I personally utilize and just examples of utilizing the data. $45 a month though. Currently it is, when will it go up? It is currently $40 a month. What I wanted to say is that it was actually $25 a month, and anyone that was subscribed at those prices will remain at those prices until the end of time, right? So until they cancel. But if anyone comes to me and tells me, oh, I canceled, but I was an early member and I was subscribed at $25 a month, I'll give them that price again. That is definitely something I'm agreeing to now and will never go back on. I never win anything, I see. Well, see, our app is not very popular at the moment, so you have a lot of chances to win that. We'll probably have like 10 people join the giveaway where I'll be giving away 5 lifetime access. I'm realistic, guys. We are a small company right now. It is still very early in the app, and we don't have the reach that we will achieve yet. But if I can be giving away to the people that are currently supporting the app, why not, right? Just to help out Justin a second here, candle profiles are very simple. And I'm actually going to bring, let me actually just make sure that I'm not going to be sharing anything I shouldn't be. Okay, I can do that. Here, let me go on something else here. Let me go on, what could we go on? Let's just go on Bitcoin, right? I will subscribe tomorrow. That is awesome news. I'm very glad to hear that. And you'll see definitely in the app and in the member area, there's a lot of things to learn from. Let's just look at the 15-minute chart, all right? When we're talking about candle profiles, Justin, I don't know if you saw the explanation, but we're profiling based on the high and low of the previous candle and how our current candle interacted with it, right? But how do you use that? That's where I'm going to focus, because if you don't have the app, then you don't have access to that data anyways. And if you do have the app, you have access to the help section, which explains basically all the profiles. But how do I use them? Well, it's very simple. If I look at these candles, right? And what if I could say that this 1330 candle is a true breakout candle, right? That is what the profile of this candle is. Once again, I'm not explaining why. It is in the help section of the app. But this 1330 candle is a true breakout, right? Let's do it correctly. This is a true breakout. Well, what I can do in the app is say, well, okay, previous candle filtering, right? And you see that already in the app, top right of the dashboard. And when you're in the candle profiles, you can see previous profile, and then you can input a previous profile. So if I'm right here at 145, I'll say the previous profile is a true breakout, right? That candle has closed and I'm now within this candle. Previous candle is a true breakout. And what you see on your chart on the dashboard, you'll look at the 145 15-minute candle and you'll see the probabilities of which profile it will be. And what does that tell you? Well, it tells you how it will interact with the previous candle's levels. If looking at the 130 candle and saying the 130 is a true breakout, what will 145 be? And it tells you there is 45% chance that it is a true breakout, 30% chance that it is a false breakout, and 10% chance it is an inside bar. Well, what does that tell you? There is about an 80% chance that this level gets taken. And once this level is taken, it is 40% chance that it will close past this level. Utilizing this, I can use these two levels as objectives, so targets, short term, and of course, you have 4-hour candle profiling, 1 hour, 2 hour, 3 hour. So you can use a lot of stuff like that. I'm unclear, and sounds like you have to toggle between the app and the chart. No, you really don't. You could, if you want to be trading it, right? Have the app open some side of your screen. What a lot of people like to do is just take screenshots and put them on their chart. In the future, there will be indicators to help you guys visualize the data directly, but not right now. Basically, at the moment, that is not something that's available, and that's something I plan to be available. And I don't want to be showcasing the app right away. I'll be making a lot of videos sharing how to use the app more in depth, and especially the candle profiles. I'm actually going to be working on this weekend to just give a walkthrough of the new candle profiles analysis. But the truth is, how are you going to use those levels? There are 1,000 ways to use them. But I was trying to bring focus about the data. What does it give you information about? The two previous levels. So the candles, high and low, how are we going to interact with them? And then you can statistically analyze that based on what time window we're looking at. So what candle we are looking at. So if I'm looking at a longer time and the 1 hour, and I see that, well, okay, if the noon candle on Bitcoin is a true breakout, so in this case, it would actually be a true breakout due to the gap, is a true breakout, then I know that there is 70% chance that the 1 p.m. candle is also a true breakout. Well, then you know that if I'm trading this candle, it will take out that level and close through it more than the majority of the time. What that tells you that within that 1 hour candle, I can look, for example, in my 1 minute chart and take a trade and be very confident that coming close to the close of the candle will be very far away from this level or just closing past this level. And then you utilize things that we know like open, low, high close, open, high, low close, and power of 3 to frame setups. Right? There are 1,000 ways you can utilize that data. Personally, I look for trends. So I look for when there are back to back to back to back true breakouts or false breakout candles. And that tells me when price is trending. Like you can see right here, back to back candles. And now I know, for example, if I had the data for it, I could tell you that this section of time is very high probability to be trending. And when it's trending, that's when I want to be trading. Okay. Once again, right here, if we look to the left, this is Bitcoin. I haven't actually looked at the candle profiles data for Bitcoin, but trending, oh, here reversal. Right. And that's actually what my Twitter post showcases, if you guys remember. Well, if you guys remember, I don't know if you saw it, but my Twitter post from today showcases this exact logic about how this morning I could tell that price was going to be trending and retrace at specific times. Definitely a lot to unpack there, but a very, very in-depth analysis full of value, for sure. Regarding the candle stats, can we distinguish between a noon candle on a Friday versus a 12 candle NFP Friday? There is currently no news filtering, but that's the next check on our list. That's actually what I've been working on mostly the past 2 days, bringing news filtering to the app so that you'll be able to filter no matter the analysis, right? So even if you're in your ranges analysis or the bias analysis or you're just on your dashboard, you'll be able to filter and say, well, I only want to see the data about NFP Fridays. I only want to see the data about PPI news, no matter the day of the week, for example, or whatnot. So every single news, being able to filter based on that. And that's actually coming very soon. Basically, the implementation is done, but we need to do very intense debugging before we bring that feature publicly. It's been working great and definitely some valuable insight there. Before we close this off, do we have any other questions? I know I went a little quickly over candle profiles, but as I said, I'll be making a more in-depth video. And definitely look at my Twitter there. I'm always sharing some sauce hidden there. So when you see a picture and there is a chart on it from the Rice Statistics app, you know there's some sauce in there. So really, really look at it. Make sense? Do we have any final questions before we close this off? Quite a long review tonight. Glad to see you all still in here. That tells me that we're actually sharing valuable stuff if people are staying, definitely. I appreciate that, Bird Dog, and I see all your comments. I really do like the support there. It helps me keep going, right? I've been doing these price action reviews and weekly outlooks for almost a year now. And see, that's how you know that profitable traders aren't popular, because I still get 50 views per video, and I'm quite happy with that. I'm helping the people in here. I'm already out here making a difference, so that's all that's important to me. It is my pleasure. Glad to see a lot of new faces. Hopefully I'll see you guys again in these price action reviews, these calls that we do every single week. But on that note, I wish you all the best. Good luck if you are trading tomorrow. As I said, personally, my week is done. I'm quite happy with my results, and I'm going to take my money and leave. But good luck if you're trading tomorrow. Have a great rest of your night, guys.